For decades, they told you it was just a speculative metal, a relic, a pet rock for conspiracy theorists. They laughed as they suppressed its price in plain sight, building a house of cards on a foundation of paper promises. But the laughter has stopped. The clock has hit zero. What you are about to witness is not a market rally. It is a systemic collision, a point of no return where the digital fantasy of finance smashes into the unyielding reality of physics. The $79 price tag you just saw, that's not a peak, it's a starting pistol. And the race is not for profits anymore, it's for survival. Welcome. What I'm going to lay out for you today is the irreversible end of the silver market as we knew it. We are transitioning in real time from a financially manipulated paper casino to a physically driven industrial crisis. The target is not a matter of if, but when. $100 an ounce is not a dream. It is the new conservative industrial floor, and to understand why, you need to see the three seismic shocks that have just hit the system simultaneously. Shocks that have turned silver from an asset into a strategic material, and from a trade into a trap. First, you must understand the fundamental fraud, the Ponzi scheme. For years, the market has been built not on silver, but on promises of silver. The paper-to-physical ratio. For every single ounce of real deliverable silver in a registered vault, there are over 356 paper claims on it. Think about that. It's a bank that promised the same dollar to 356 different people. This was sustainable only as long as nobody asked for their actual metal. As long as it was just traders betting on screens, passing digital IOUs back and forth. This system allowed price suppression on a scale that bankrupted minds and distorted reality. But it created a fatal vulnerability. It only works if industrial users don't know how to actually need the metal to build things. Enter shock number one, the Musk signal. When the world's preeminent industrialist, the man building the electric car fleet, the AI infrastructure, and the space-based future, tweets these 9 words, you do not interpret it as market commentary. You interpret it as a panic signal from the ultimate end user. This isn't a speculator talking his book. This is the guy at the end of the assembly line looking at his procurement sheet and seeing a blinking red light. He's saying the physical flow is threatened. And with that tweet, he kicked off a corporate hoarding cycle that changes everything. Overnight, the mindset shifted from speculation to survival. The CFOs at Tesla, Apple, Samsung, every major tech and green energy giant got the same memo. Secure your supply chain at any cost. They aren't buying a ticker symbol. They are buying a critical component without which their products, their entire businesses, grind to a halt. Silver isn't just in everything high-tech. It is the irreplaceable element, the best conductor of electricity and heat on the planet. There is no version 2.0 for it in AI servers, in EV power electronics, and solar cells. When these companies enter the market for physical metal to stockpile, they are not bidding against hedge funds. They are bidding for the lifeblood of their quarterly reports, and they will not stop. This demand is price inelastic. They must have it, whether it's $30, $100, or $500 an ounce. This is the first leg of the trap closing, the physical pull from industry. But just as Western industry wakes up to this need, shock number 2 hits, the Chinese blockade. Effective January 1st, 2026, China has implemented a new export licensing system for silver. The requirements are so prohibitively strict, an 80-ton production capacity, $30 million credit lines, that they instantly disqualify all small and mid-sized exporters. This isn't a tariff. It's not a quota. This is a strategic physical blockade. Its purpose is clear. Trap every single ounce of newly refined silver within China. AES borders for its own industrial machine. Think of the scale. China is both a massive producer and the world largest consumer of silver for its solar panel, EV, and electronics dominance. Now, they are officially cutting the cord. This creates a bifurcated world, a bifurcated reality. Inside China, a state-controlled, well-supplied market feeding champions like BYD and their solar giants. Outside China, a panicked, supply-starved West. The global supply chain for physical silver has just been severed. The West, which has outsourced its refining and manufacturing for decades, now faces a wall. They can have all the paper dollars they want. They cannot have the physical metal. This is deliberate. This is financial warfare. These 2 shocks, the desperate pull from industry and the severed supply from the East, are crashing into a third undeniable force, a persistent structural physical deficit. For years, we have consumed more silver than we've pulled from the ground. In 2025, that gap was about 250 million ounces. Where did it come from? From the drawers of the system. From above-ground inventories, from vaults, from stockpiles that were quietly drained to paper over the problem. That buffer is now critically low, the cupboard is bare, and into this empty room now walks every major corporation on Earth, needing a 6-month strategic stockpile. The math is not just bullish, it is catastrophic for the paper system. So connect the dots. The 356.1 paper Ponzi scheme is facing a run on the bank. But it's not a run by investors. It's a run by customers. When Tesla's battery division calls their bank and says, "We need 10,000 ounces of physical silver delivered to this factory next month," the bank can't give them a PDF receipt. They need to find real metal. And for every 1 ounce they find and ship, 355 paper claims are suddenly exposed as vapor. Those claims don't just vanish, they get cash settled. But with what? With dollars that are being printed at a pace we have to talk about right now. This is where the system goes from broken to self-immolating. Shock number 3 is the Federal Reserve's doom loop. Recently, we saw an emergency overnight repo operation by the Fed to the tune of over $17 billion. Why? Which banks needed a sudden, massive, unexplained liquidity injection? I'll give you one guess. The same banks with the largest short positions in the silver market. They are facing catastrophic margin calls as the price rises. They're getting buried by their own paper short bets. And the Fed, to save them from immediate implosion, is printing the money to bail them out. But don't you see? This is a self-defeating, suicidal feedback loop. It's a financial doom loop. They print money to bail out banks from rising silver prices, but printing that money debases the currency, which makes tangible assets like silver go higher in price, which triggers even bigger margin calls, which requires even more printing. The Fed has inadvertently placed a permanent put option under the silver price. Their only tool, the printer, is the very fuel for the fire. They are trapped. They have chosen hyperinflation of the dollar over the immediate collapse of their banking partners. The pivot is permanent. The currency is being sacrificed. This is the contagion risk. The losses in the silver market are not isolated. They are connected via derivatives and collateral chains to the entire financial system, just like mortgage-backed securities were in 2008. The Fed is now faced with an impossible choice. Let the system detonate or print into oblivion. They've shown their hand. They will print. And in doing so, they are signing the death warrant for the purchasing power of the dollar and launching the final phase of the greatest wealth transfer in human history. Let's pause here. Let this sink in. The industrial user has been activated. The supply has been cut. The paper market is a multiplying fracture. And the lender of last resort is pouring gasoline on the fire. When we come back, in part 2, we will connect this to direct, actionable intelligence. We will talk about the unobtainium phase, the true price signal to watch, the desperate tactics they will use next, and exactly what this means for you, your savings, and your future. This is not a drill. So the stage is set. The mechanisms are in motion. Industrial panic, supply blockade, and a Fed trapped in a hyperinflationary doom loop. But what does this look like on the ground, in your world? What happens next? And most importantly, what do you do about it? This is the blueprint for the endgame. We are moving rapidly into what I call the unobtainium phase. This is where physical silver becomes unavailable at any price through normal channels. Not expensive, unobtainable. The price on the screen, the spot price, will become a meaningless fiction, a ghost number from a broken paper system. The real price will be revealed in 2 places, premiums and delivery times. You will see a $30 spot price, but the cheapest silver round from a major dealer will cost you $80. That $50 premium is the real market. It is the panic bid for immediate deliverable metal breaking away from the bankrupt paper contract. You will see delivery delays stretch from days to weeks to months. Then allocations. Then orders simply not filled. The physical chain will seize. This disconnect is the final death rattle of the paper pricing scheme. When this happens, ignore the headlines about a flash crash in silver. That will be a desperate engineered move in the paper market to try to shake out weak hands and provide cover for the failing banks. It won't reflect reality. Watch the premium. That is your truth. This is also where the geopolitical warfare becomes undeniable. China's blockade is a masterstroke of financial warfare. They are exploiting the West's fatal weakness, its addiction to financialization and its empty vaults. By strategically tightening the physical noose, they force the Fed's hand. They know the Fed will print to save its banks. Every trillion printed is a trillion that weakens the petrodollar system, devalues U.S. Treasury holdings, and increases China's relative global power. They are not just hoarding silver, they are weaponizing it to hyperinflate their primary geopolitical rival. This is a slow-motion financial siege. So, let's get tactical. What is the investment narrative now? Throw out the old playbook. $100 per ounce is not a target. It is the new industrial floor. It is the minimum price required to even begin to balance the catastrophic physical deficit in a world without Chinese exports and with corporate hoarding. This number is not based on chart patterns or hedge fund sentiment. It is based on the survival calculus of Fortune 500 companies. They will pay it. Therefore, it will be paid. This means the era of paper silver is over. If you do not hold it, you do not own it. Full stop. ETFs, futures contracts, unallocated accounts. These are now liability claims on a bankrupt counterparty. When the music stops, you will get a cash settlement in a currency that is being actively destroyed. Your ticket will be worthless. You must move along the security spectrum towards unambiguous physical ownership. That means bullion in your hand, or an allocated, segregated storage with a reputable non-bank vault where your name is on specific bars. This is no longer an investment. It is a migration of wealth from a decaying system into a tangible form. For the average person, the strategy is simple, but it requires a shift in mindset. Stop thinking of this as a speculative play. Start thinking of it as financial insurance. You're not betting on price. You're paying a premium to protect a portion of your wealth from the systemic rot we just outlined. Your savings in the bank are a claim on a failing system. A silver ounce is a piece of the future industrial world that cannot fail. Allocate a percentage you will not need to sell, regardless of volatility. Secure it. Then, forget the daily price noise. You're not a trader anymore. You are a holder of strategic, physical reserve. And look beyond the crisis. What is on the other side? A world utterly dependent on the very properties of silver. The AI data centers, the fully electrified vehicle fleet, the orbital economy, the solar-powered grid, all of it hinges on this metal. The company that controls the physical supply chain controls the pace of this future. This crisis will reset the global board. Wealth will not be measured in digital bank credits, but in control of tangible resources, energy, food, water, and critical materials like silver. This is the greatest wealth transfer in history, from the holders of paper promises to the holders of real things. So, to summarize the script of the next decade, Act 1. The Musk signal ignites corporate hoarding. We are here. Act 2. China's blockade severs global supply, bifurcating the market. Act 3. The paper Ponzi scheme collapses as industrial delivery demands hit. Act 4. The Fed prints into a doom loop, sacrificing the dollar to save the banks. Act 5. Physical silver enters the unobtainium phase, detaching from spot. Act 6. A new system emerges, built on tangible asset backing and reordered geopolitics. Your role is to move from the audience onto the stage before the curtain falls on Act 3. The window to exchange your paper claims for physical metal at a reasonable premium is closing by the day. The signal is not a single headline. It is the convergence of all of them. The industrial tweet, the export license, the emergency repo, the draining vaults. It is a symphony of failure. They called it a pet rock. They called you a conspiracy theorist. But in the end, physics always wins. The digital fantasy of infinite paper claims meets the immutable reality of a finite physical element. The transformation is historic. It is irreversible. And it is now. Secure your foundation. I'll see you on the other side.